Alright, so basically guys, I don't want to like drag this on for too much. I'm not too sure if that's like drags on for too much, but let me first I want to show you guys an example of basically an example, okay? So this is the first example. So this is by Lewis Kelly, and over here you can see that this is basically about auto blocks, okay? For example, like over here, you can see that this auto block has been reclaimed by this, right? Unclaimed auto blocks, for example, like auto blocks is basically where, like the definition itself is basically a block where a lot of orders are placed, okay? Auto block, that's why. So this comes in two types, supply level auto blocks or demand level auto blocks. So just like this, supply is the top and demand is the bottom. Now, auto blocks always go in the form of like, let's say a valid auto block is identified when this candle right here, let's say it's coming down, and then you see one candle just sweeps the low of this, and then it makes space for another candle over here. Now this is where, now if you see proper momentum here, this is where the auto block is. Now if there's no space in between, then this is not an auto block, and therefore the next candle is the one that needs to be taken. Whatever candle that gives the space in between, right? With like a fair value gap type of space. Okay, clear? All right, so now this is supply, this is demand. Supply is top, demand is bottom. Supply is top. Okay, so this is a demand level auto block, supply level auto block, whatever that comes at supply or demand. Okay, supply is that. So now, what I want you guys to know, okay? So first of all, now if you think about gold, right, XAU, the thing about gold is gold always moves from auto blocks. Now the thing is, gold's value just keeps rising, right? Obviously it keeps rising, but then even in any scenario, if it tries to like come down, it's going to be like temporarily. Okay, so my top down analysis is 4 hour, 15 minute, and 1 minute. Okay, so let me break down what these individually mean. Let's go from the top to bottom. Okay, top down. Okay, so first of all, in 4 hour, I look for what the overall structure is. Now in gold, it's pretty simple. Gold, most probably, I mean more times than not, gold is always following swing structure like this. Corrective moves, swing structure, corrective moves, swing structure, corrective moves. Now this is the 4 hour, right? This is the whole concept of time is fractal. If you don't know what a time is fractal means, it's basically think of models inside models. Now, what happens in the 4 hour in a smaller scale is basically what happens in a 15 minute in a larger scale. Because each 4 hour candle is made out of what? Like wait, sorry. That's 16 different 15 minute candles. Okay, so each of these is basically like 16 different is that a correct math? Not too sure. So 60 times 4, 240. So 16. Yeah, okay, okay. So over here, so I was just like doing that shit in my head, but okay. So anyway, that's not really the point, right? So anyways, the point that I have to make is each of these candles, 16 of these 15 minute candles is basically what makes one 4 hour candle, because it's 240 minutes, right? So what I need to explain here is like any small change on the 4 hour is basically a huge change on the 15 minute. Now over here, you see this is basically the impulsive. This is a corrective, impulsive, corrective, impulsive, corrective. Now these corrective moves don't just come down, right? They always come down to one of these. It's called PD arrays. Now PD arrays classified as auto blocks, swings, and swing lows as in swing lows or swing highs. Okay, swing SH, and fair value gaps. Okay, fair value gaps, internal range liquidity. Now the rule of thumb is basically internal range liquidity, in other fair value gaps, in other words, to external range, right? So it basically price moves from internal range to external range. Okay, so this is basically swing highs or swing lows or swing highs. Okay, that's basically what I've explained here. Now this auto blocks classify as supply level auto blocks or demand level auto blocks. Now the thing about auto blocks is like there's reclaimed auto blocks and unclaimed auto blocks. A reclaimed auto block is basically when price has tapped back into that auto block. Now what do I mean by this, right? So for example, over here in this example, you can see that this, okay, let me just like draw on this so it's easier. So over here on this example, right? Let me just grab this. So if you guys can see this example, you can see that this auto block, okay? So let's say this right here. Now there's a candle, okay? There's a candle that pushes price upwards before it comes downwards. It's the last candle that before the momentum actually continues in the opposite, inverse direction. Okay, so the last bullish candle before the bearish move. So this is basically where the auto block is made. Now here, it's pretty obvious that the auto block was ranging all the way to here, right? So if you, let's say for example, like this pullback, this corrective move, right? Because we know for a fact that now price is like shifted in structure, right? So it's not really a market structure shift here itself, but basically at this point it has shifted structure. Now, why is this important, right? So what I'm saying here is like over here, now this might have pulled back because of one reason, because of a fair value gap. Now, if you, so some people do this thing where they entry, like let's say they entry of the fair value gap, and then they put the stop loss like at this, right? And then like target this. Now let me tell you why this is the worst mistake, and I fell victim to this. Now, if you think about every fair value gap, now let's say you look at a 15-minute fair value gap, like let's say obviously like you're gonna look for like top-down analysis. First of all, you're gonna see like the overall structure, right? Okay, I have to make this clear as well. So this whole thing is just the 15-minute. And if you identify the individual 4-hour blocks, it's obvious that the price is going bearish. Like this is the swing. This is the impulsive corrective, impulsive corrective, impulsive corrective, impulsive. Simple as that, right? So if you look at it like this is the overall 4-hour structure. This red line that I drew on top, right? Now, basically these corrective moves don't just correct, right? There's always something behind it. Now, this is what I would call the market makers. Okay. It's basically how price delivers, okay? In other words, so what I need to explain here is, now some people like say, oh, this is a market maker model, okay? So this is like a market maker sell model because, you know, buy side of the curve, sell side of the curve. It's not that simple. Let me explain why, okay? So for example, over here, you can see that this is an order block which is reclaimed, and then it just like taps price down towards this TP, okay? Over here, breakout structure is basically the BSL. I mean, in this case, it's SL, okay? So this is the TP. But in other words, so the real important concept here is the fact that price always comes back to fair value gap, okay? Now going back to the fair value gap theory, this is what I need to make you guys very aware. So every fair value gap has two things that happens, okay? First of all, there's one type of fair value gap, okay? This is like, just think of this as a 15-minute fair value gap, okay? I'm bad at drawing. But over here, so first of all, there's always a manipulation, right? A manipulation is basically just taking out trend line liquidity and basically retail traders. Okay, manipulation is basically smart money concept, part of the power of 3. In other words, AMD, accumulation, manipulation, distribution, right? So distribution leg is where you're trying to like capitalize on, right? Let me tell you why this doesn't work. Okay, most of the time this doesn't work. There are times where price does the ICT 2022 model, just like market structure shift, pullback, and manipulation, entry, distribution, right? Now let me tell you why this doesn't work most of the time and just goes to your stop loss and just like takes you out and then goes. Now this takes you out. Now imagine a scenario where it like you think it's going to go higher and you get your confirmation from here, but then it just like goes in the inverse direction. Now let me explain why this happens. Now this is called inducement. In other words, it's a stop hunt. Now stop hunt happens because you, okay, by the name itself, this is where you put your stop loss, right? Obviously, because you want to get the best risk to reward. But here's the problem, right? You get no reward because you get stop hunted. Now stop hunt is basically when you have a second round of manipulation, because here's the thing, right? Smart money wants as much liquidity to come into the market, right? So what they do is they get you out, right? Because they know that you're sitting here with your ICT 2022 model, and then they take you out and then take your stop loss, and they exactly know where you're going to put your stop loss because it's this order block over here, right? And then they have the real market structure shift, distribution, pullback, and then distribution. Now this happens most of the time because this is way too common. This ICT 2022 model, like look at the fair value gap, put the stop loss put the stop loss right here. Now here's the better approach, okay? So let's say there's two simple concepts that I'm going to show you guys. So first concept is basically order blocks in itself. Now unclaimed order blocks, okay? I'm just going to say UOB, okay? Unclaimed order blocks. Unclaimed order blocks are basically order blocks where the supply or demand level where the order block has not been tapped into, okay? Supply is basically the top, demand is basically the bottom, okay? In every price leg, you will see supply and demand, okay? So the thing is, not every price leg must be acknowledged. First of all, you need to do the top-down analysis. Now, I wish I could like explain fully like what's in my head, but like in words, it's too much to explain at once. But I'm just gonna like try to explain the best I can, okay? So first of all, this is an unclaimed order block, okay? So unclaimed order block means it's not reclaimed, which means there's a space in between. So for example, like in here, like imagine this wasn't here, like this leg of price action wasn't here, okay? This level, this order block, like think of this whole thing as like one candle order block. So this order block is a test, is a level. Now if this wasn't there, this has not been tested before, right? So that what price is ultimately going to do is it's going to eventually come back to the supply level order block, this whole level, in other words, and then go towards the opposing sell side liquidity draw. Now let me explain why order blocks are better than fair value gaps. Okay, the reason being is because now in fair value gaps, right? Yes, you get much like higher risk to reward, right? But here's the problem, right? There's no point getting higher risk to reward even if you have like if you get no reward whatsoever, right? So let me explain to you guys why this doesn't work. So in a fair value gap, right? In a fair value gap, so let's say this is this fair value gap. Now this is what happens. Okay, first of all, there's a manipulation round for everyone who's believing in the AMD and the ICT 2022 model. Okay, so basically, in other words, 2022 model, if you guys don't know, is basically when market structure shift happens, pullback, entry, distribution, right? And basically what price is it just like goes to your stop loss and then takes you out and then it goes in the direction it's supposed to. Now this is the manipulation and this is the inducement. Okay, this is basically the inducement. This is the inducement. In other words, this is called the stop hunt. Okay, it's basically taking you out of the market, adding more liquidity, having a real market structure shift, and then going towards the actually supposed to direction it's supposed to. Now let me explain why this is not so simple, right? So the best way, it's like this is the approach that I take. Now for example, if you see, let's say on the 15 minute, right? 15 minute. Now obviously on okay, if you align 4 hour 15 minute, like considering this is my top down analysis, now your top down analysis might be different, but it's basically the same concept overall, right? Now the thing is, what I've seen is that basically in any of these time frames, now obviously in the 1 minute you just look for a market structure shift, and it's not really much on the 1 minute. You just like look for a market structure shift and that type of thing, right? But at most you would look for a stop hunt, right, on the 1 minute. But the thing is, on the 15 minute and the 4 hour, this same concept applies, the whole concept of supply and demand. Okay, especially on gold. Okay, gold always follows this and market structure. Okay, the reason being is because gold is always on the higher time frames. It's always on a higher and higher type of move, where it just continues to move higher, right? So we have the swing structure, corrective move, impulse, corrective impulse, corrective impulse. So this is the whole overall structure. So this is swing, this is sub, swing, sub, swing, sub. Now consider this as the 4 hour. This is just a 15 minute market maker model. In other words, a market maker buy model. Sell side of the curve, buy side of the curve, TP, just like that. Okay, but what I need to explain to you guys is basically, now let's say that you see a fair value gap. Let's say like this was one specific move. Now you see this, right? You see like basically price goes to like a buy side of the grid draw and then pulls back towards like, let's say, the overall structure. Like this is the 15 minute. Okay, don't confuse. So this is the 15 minute and this overall structure. So you know, in the 4 hour, it's basically there's like a lot of resistance liquidity. Resistance liquidity is basically like low resistance liquidity. So if you guys want to know what that is, please Google it up. You know why? Because it's basically, okay, let me explain it. So it's basically unswept highs. So let's say there's a high over here. Now like this high has been swept out by this one, right? But this one has not been swept out if all the other highs are basically bearish. Now, when the price is going in that direction, it's supposed to take out all this liquidity, all this resistant liquidity, in other words. It's called trend line liquidity. Okay, so in other words, when it's doing that, right, when it's basically trying to take out all these in the higher time frames, it's basically just going to be bullish, right? And at most it's going to have a corrective move to correct this fair value gap, this huge displacement, in other words, this imbalance in price. So what price is going to do is it's going to have this market structure shift, and some people, once they see this, like think of this as the 1 minute, once they see this market structure shift, they're going to see the pullback, fair value gap, entry, distribution. Now this is why this doesn't work. Stop hunt. Okay, simple as that. Now the best approach for this is putting your stop loss at the low of the fair value gap. This way, yes, if there's a wick at the bottom of the wick. Now the reason being, because if you put your stop loss at the low of the wick, then you have no problem even getting induced by stop hunt, because the manipulation is done, the stop hunt is done, and by the point it reaches your like the low of the fair value gap, all this jazz is done. That's what I'm saying. And plus, in this 15 minute, okay, in this 15 minute structure, either way, okay, whether it's inducement, luck, or whatever you want to call it, okay, this discount level is basically where it would offer you proper risk to reward. Okay, premium would give you something like a 1.5 or 2.1 at most. Okay, 2.1 at most. Is it really worth taking this? Now, some of you guys might be like, oh, hey, I got a 1 or 2 out of this side. Now, the thing is, you should go for at least minimum 2.3 or maximum about 5. Okay, 5 is like the max you should go for. Even if you see like a 10, you should go for a 5. And then minimum, you go for like something like a 2.2 or 2.3 at minimum, because it's not worth like risking without like having proper risk to reward, right? Anyways, this is basically what I want to show you guys. So put your stop loss at the low of the fair value gap. Do not put it somewhere like here. Like I get that like you're tempted to like sort of make more money by waiting for like the 1 minute, putting it like below the 1 minute, 1 minute stuff, right? Like that's a 1 minute order block, you put it below that, and then like, you see this happening, and then just like you get stop hunted. That's what happens. So all this could be avoided if you just put your stop loss below the fair value gap. Simple as that. Okay, like the 15-minute fair value gap. So because all this jazz happens within the fair value gap, even the stop hunt, even like this happens. Okay, there's one more thing that I have to make mention. Now, if price is like going like lower and lower and lower, if you see a lot of displacement towards the downside and you don't see a rejection wick, now let me explain one thing about candle CRT. Okay, candle rigidity. It's basically just how candles work. Okay, the candle anatomy. Now, if you see this wick, right? If this is what you see at the fair value gap, at the fair value gap like this, now the chances are, okay, let me just make this up. This is a manipulation wick. Okay, a manipulation wick, especially if you see something like a doji candle, that means there's a loss in displacement. Now, this is the best case scenario for a reversal. Now, what I mean by this is basically like, let's say there's a lot of bearish, like high displacement. In other words, like a very strong candles displacing through the like fair value gap. Do you think this fair value gap is going to hold? No, it's not going to hold. You know why? Because there's a lot of displacement, a lot of pressure towards the other side, the opposite side. So obviously like entering from there would be like the worst mistake you can make. So you want to wait for a confirmation, a loss in displacement at the fair value gap to prove that it's not going to just crash through the fair value gap, but rather would reverse through. You know what I mean? So it's as simple as that. So basically, yeah, so that's what I want to make sure. So again, even if you have like a second round of stop hunts, you should still get pretty good risk reward, because like you put your stop loss at the low of the fair value gap and target the 15-minute buy side liquid draw somewhere like here. BSL basically. Okay, buy side liquidity. I'm just gonna call it BSLD, buy side liquid draw. Simple as that. It's pretty easy. Apart from that, what I want to show you guys is, okay, so this is the discount level, right? So discount level is like the best spot to be entering, because order flow is like, it works best at discount levels, especially if you see rejection wicks, like basically the theory that I just showed you guys like a minute back. If you don't want to, just rewind the stream. Okay, so it's as simple as this. So you just want to put it on discount. Discount is like the best place to just like entry, because it always, like, there's a high likelihood, especially if you have a loss in displacement and the like of the PD areas like fair value gap has been respected, then it's the best place to like entry from. Okay, simple as that. Apart from that, what I want to make sure is like, okay, reclaim all the blocks. Okay, so there's always internal range. So the first theory is basically fair value gaps, right? Fair value gaps, boom, simple as that. Okay, so the next one that I want to make sure you guys know is the reclaim order blocks. Now, there could be two types of reclaim order blocks. This might be a little bit of a confusing thing, right? So let's say this level, this is like in a bearish scenario, this whole overall thing is bearish. Okay, so in a bearish scenario, you would see like a supply level order block. Now this order block has not been tapped into, so obviously like price taps into it and then goes lower, right? But is this really like, okay, I get that you won the trade, okay, so let's say it goes towards your stop side liquidity, but was this really where you were supposed to take it from? No, it wasn't. You know why? Because this right here, there's another unclaimed order block over here. So for like although you get lucky from here, like this 15-minute, think of this whole thing in the 15-minute time frame again. So even though you get lucky over here, this might not actually be like the real how do I explain this, the real spot where it was supposed to go down from. It was just like you got lucky over here. The real spot that was supposed to go from was here, this order block over here. Okay, and then it was supposed to do this. Why? You know why this was supposed to be the one? Because this comes with the whole approach of top-down analysis. Now the 4-hour will tell you there's going to be some sort of confluence with the 4-hour and this, whether it's the 4-hour fair value gap that it's tapped into, and then like you see this as part of the 4-hour fair value gap. Now I will show you guys an example of this on the gold chart. I have a prime example of this and a trade that I'm taking in real time right now. It's like, it's kind of like frozen because of the, because market's closed, right? But anyways, what I want to show you guys, so keep mind you, okay, let me get rid of all these lines. Okay, my top-down analysis was basically 4-hour, 15-minute, and then 1 minute. Okay, 1 minute is basically just the market structure shift plus stop on. Okay, so I'm just gonna call it 1 minute inducement. Okay, 1 minute inducement entry. Okay, but I don't really depend too much on the 1 minute, because like the 1 minute inducement at most for me is just like extra risk to reward, like a bit more risk to reward. You get me? So once I see that market structure shift, I can entry with no problems, because I know for a fact that it's gonna hit, because my fair value, my stop loss is below the fair value gap. Do you understand? So I mean below the order block. Okay, all the fair value gap if the depends on the scenario. So over here, you can see that this is the top-down analysis. Okay, so basically highest time frame, middle time frame, and low time frame. So this is my alignment right here: 4 hour, 15 minute, 1 minute. So let me explain to you guys how this works. Now you can see this is a clear example on gold. Now remember what I said about gold. Gold is always moving higher in value. See, it just breaks structure towards the upside. Even though it has temporary pauses over here, it just keeps breaking structure towards the upside. See, simple as that. Okay, so let me explain to you guys what's going on here. So you can see this is on the 4 hour, right? So obviously over here, you can see this is the 4 hour fair value gap. Now this has been wicked into. Now this has been wicked into, as you guys can see. Okay, but let me explain why I took this trade from this specific wick right here. Now if I zoom into the 15 minute, you guys can see that there is a unclaimed order block over here. Is there any other order block here in this 4 hour fair value gap? That's what I'm saying. So this demand level order block. So over here, you can see this is the 4 hour fair value gap. This is the 15 minute order block right here. See this order block, this one right here. Let me just okay, there we go. So this order block right here is basically, now in addition to the fact that it's basically the order block, you can see the shift in the market structure, and you can see the stop punt just like that. See, 15 minute, and you can see the stop punt just like that. Now again, I put my stop loss below the order block. Now it's going in the direction that it's supposed to. Now why am I taking it towards here? Because there's another unclaimed order block. Even though all these order blocks are here, you see the real order block that's supposed to be balanced out is this one, because price moves from order block to order block. So even if it takes out all this liquidity above, I'm going to put my stop loss below. Okay, now, again, this trade, basically this one we won, and this one is the other one that we're taking. So over here, this right here, you can see I'm putting it below the order block because this supply level order block might have a reaction and might reverse the market, whether it's supposed to pull back and then like go back towards the liquidity draw, or whether it's supposed to just, you know, displace and reverse from reversing the opposite direction. Now the thing is that the key point is that you align it with a higher time frame bias. For example, this is the 4 hour fair value gap, and this has been wicked into. Now I saw a 15 minute supply level order block, demand level order block, and you can put it below the stop loss below the order block, and boom, you take it just like that. You see the loss in displacement just like this. You see the stop punt, and boom, just like that, you take it towards the opposing supply level order block. Simple as that. I put it below the body of the order block because an order block is usually a spot where you see a reaction, right? Whether it's to a pullback and then just go higher, or whether it's to completely inverse. Okay, so again, this is basically what I want to explain to you guys. So supply and demand order blocks, unclaimed order blocks, okay, not just any random order block, because that I'm explaining to you guys what an claimed order block looks like. For example, here you see this order block. This has been claimed. See, this has been tapped into, and then price has gone higher. Now, if you look at the same concept over here, right? This level has been claimed. See, this has been claimed. Price has gone higher. Now, if you look at this one, this order block, this has been claimed. Boom, just like that. Okay, it swept now this low. Okay, once that was done. Now, don't confuse this with this. This one has been used over here. This one has been used over here. This one has been used. This one has not. Yeah, this one has been used over here. See. This one has been used over here. Boom, just like that. Now this one, all these lows. Now this is not really an order block weekend. This is a liquidity sweep, just like that. Okay. So, in other words, you just have to be aware of where the order blocks and everything are going to be taking place. Okay. So over here, you can see that this liquidity sweep happens. It just balances price out. You see this order block over here. This has not been rebalanced, but then eventually this order block over here, this demand level order block, has been rebalanced over here. Just like that, it pushes price higher. Right, and then you see this. So this order block balances this one. This order block balances this price movement up higher. See, so that's basically how it works. Because on, like, if you think about it, it's the whole concept of time is fractal, right? So if you go to like the 1 minute, you can, all this is basically like huge supply and demand levels on the 1 minute. So it applies whether it's like from a higher time frame to the bottom time frame. The point that I'm trying to make is the highest time frame, or whatever, like the time frame alignment that you guys are using, the highest time frame, the higher the better, okay? Because the less noise you have, the better clarity you get, okay, of the overall picture. You just want to construct a story. So it's always impulsive and corrective moves on a higher time frame, and you align it with the middle time frame, and then you see a inducement on this lowest time frame, and then you just execute. And basically this is how you stay safe. I would personally recommend taking 4 hour, 15 minute, and 1 minute. This is basically what I use, and I don't really recommend anything else because all the other time frames are kind of like bogus, at least in my opinion, because I don't personally use them. So over here you see this market structure shift once again, inter-term high broken. So it's proving, you see the displacement. this candle which displaces through this market structure shift. Boom, this is confirmation, because this means there's a lot of displacement towards the upside, see, on the 1 minute chart. So now this is paused because the market's closed. But pretty much, if you guys see that, now you can pair that. Okay, once you have that idea, that's when you want to pair it with these sessions. Okay, sessions raw. So you see this Asia consolidates, London manipulates, NY distributes, and then NY balances out this order block, and then NY just continuation, just like that. Simple as that. Anyways, that's pretty much what I wanted to show you guys. I think it was, I don't know if this was really clear. If you guys missed something, just like, I don't know, rewind back. And this is something that works best for me, at least, on XAU, okay, gold. Okay, so this is basically backtest this. Don't just like go and apply this like a fucking, you know what I mean? So basically, just don't apply this like straight away. Just go backtest this and see if it works out for you as well. Because you need to like practically get the experience, right? So you want to backtest this, you want to validate it for yourself. Also pay attention to market structure. Now, if you are, now there's times where I made stupid decisions. So let me show you guys a trade that I took and I lost because I didn't pay attention to 15-minute market structure. Okay, even if you have the higher time frame aligned, there's one more thing that you're missing here. Okay, let me show you guys what that exact trade that I'm gonna show you guys a few trades that like went completely the way that I was expecting it to, and I'm gonna show you guys some trades that are basically examples of just me getting lucky, okay, and some trades that are examples of just me utterly doing fucking stupid shit. Okay, easy as fuck. So let me show you guys. Let me pull up all these examples so that way it's easy to explain, right? Again, once again, guys, before, like, I also have to mention this. When you like journal every single trade, like, I know it might sound like it's boring as fuck, but like journaling is like the best way to like get good at this shit, because like you really need to like sort of have like, you need to know if you're like if you're like initial bias. So sometimes like people like cancel the orders like before it's supposed to, you know, just to recover, like you know, reserve the profits, right? But the thing is, you don't know if you're getting better unless you know like what happens afterwards. You understand? Like you just need to know, like, even if you lose, you need to see what the aftermath is. Like why like was this supposed to do this in the first place? And that's how you like build the experience. Because there's nothing like the experience. It's like, it doesn't matter what concept you learn. There's no such like, it doesn't matter. Like you could learn every concept under the sun. Also, one more thing, I need to explain this about Elliott wave theory. Now, this is something I didn't really specifically learn Elliott wave theory, but this is something that I want to explain for what it's worth. Okay, so Elliott wave theory goes. Let me just quickly elaborate. Elliott wave theory goes in. I'm too lazy to draw that shit, so let me just explain it in like, just type it out. So Elliott wave theory moves in 1, 2. Okay, 1, 2, 3, 4, 5, and then you have ABC. Okay, so let me just take this to the second line over here. Okay, so it's basically 1, 2, 3, 4, 5, and then you have A, B, C. Now, what does this mean, right? This doesn't make sense, right? So let me explain what this is. Okay, so think of in a bullish scenario. Okay, higher time frame is bullish. Okay, so think of 1. Okay, there's the first impulsive move, corrective move. 2, impulsive move. 3, corrective move. 4, 5, impulsive move. Now A, okay, A is going to break the market structure. Okay, A, and then B, and then C. You get this? Now this is what happens in the swing structure, like the 4-hour high time frames. Okay, so this, the whole idea of Elliott wave theory, again, don't depend on these Elliott wave theories and all that. Like it don't depend on it itself, like, because this is gonna get super confusing. But for what it's worth, it's the 1, 2, 3, 4, 5, A, B, C. Simple as that. Okay, so let me just draw examples of this. So just like this, and let's say you see this, and then you see something like this. Simple as that. It's as simple as that. You pull back, entry, pull back, impulsive, corrective, entry, pull back, entry, boom, impulsive, corrective, and then pull back, entry, boom, just like that. Impulsive, down towards whatever the sell side liquid draw was. And just like that, you can just like, you can literally just put this, do that, and take this towards here. Easy stuff. Okay, so pretty much once you know the order flow, where the river is flowing, because if you know for a fact that it's basically breaking structure towards the downside, this line that I'm drawing here is, but think of this whole thing as like the 4-hour, and this small thing that I'm drawing here is the 15-minute, because obviously like over here, just like that. See, if you see this, obviously you know the order flow is flowing, where the river is flowing. Okay, where the order is flowing, think of it like where the river is flowing. If it's flowing bearish, the last thing you want to do is catch a falling knife by going bullish. Okay, so but that does not mean you shouldn't always be like bearish on a higher time frame and bearish on a low time frame. It's all down to like the context, and the context like you improve with that, the more you get the experience. Simple as that. Okay, so this is the sell side liquidity draw. It's as simple as that. Okay, so this right here, so this is the order flow. You put just the stop loss above. Okay, in this scenario, if you just flip this around, it's basically the same shit other way around. Okay, because this is the example. So you put it above, in this case above, because this is bearish. Okay, this is basically a market maker sell model. Okay, you put it above, and you're safe. Everything's good. Just take it down. Easy stuff. Okay, once again, this is let me isolate this so that it makes more sense. 1 2 3 4 5. Okay, so that 1 2 3. Okay, 1 2 3 4 5. A B C. Okay, so A B C is over here. A B C. Okay, this is the context, and this is how it applies. This right here is Elliott wave theory. Okay, it's as simple as that. You don't need to overcomplicate this. You don't need to wait for like retracements and all that other nonsense, right? It just overcomplicates shit. Doesn't really matter. Okay, anyways, I'm just gonna leave that for you guys if you guys want to like take a look at this. But basically, you can see in this scenario, for example, this is a 15-minute order block. Okay, you wait for 1 minute market structure shift confirmation, and that's all you need, because you don't need to know. If you see a market structure shift, you know that it's going to be a stop hunt next to induce the people who are using the 2022 model, and then afterwards it's going to go lower. Now, even if you see the 1 minute market structure shift, that's a confirmation that the price, like how do I explain this? The displacement is dead, right? Which means it's going to reverse, right? Because when you see the 1 minute market structure shift, especially if you see a rejection wicks, that means the displacement is dead. Therefore, it's going to induce the second round of traders, and then it's going to go in the direction that's supposed to. Simple as that. Okay. So if you put your stop loss above the order block, simple. It's easy as fuck. Okay. This is easy as fuck. See, boom, just like that. Sell side liquid draw, TP, easy. Okay. And overall in the swing structure, you can see that this is basically, see, impulsive, corrective, impulsive, corrective, impulsive, corrective, impulsive. Okay, market structure right here, price action in other words. Okay, so you can see this is an order block example. See, this is a trade that I took over here. See, again, this is the exact concept that I'm using. See, supply level order block, retaps into that level. You take it from there. You see that thin displacement over here, and then you take it towards the opposite by sell liquidity in this case. So this is basically the opposite draw over here. See, so you can, if you want to be safe, you can like take it towards over here. Now, if you see a huge displacement, then you can just take it towards this spot itself. Now, the reason why this works out perfectly is because there's a fair value gap, right? Fair value gap, you see the manipulation, you see this like drop in price down towards like this level, but it doesn't really induce here. It takes them out, and then it goes from the order block itself, because there's a unclaimed order block over here. Okay, this is one example. Now, the second example over here, these are all trades that I took. So over here, you can see this is a 15-minute fair value gap. So you can see price just goes, it breaks structure over here. It's basically a change in state of delivery over here. And then it basically just goes higher, boom, back towards this order block. So this order block has been reclaimed by this one. This one has not been tested. Boom, you can take it from here. You can put your stop loss at this order block. So let's say like let's look for models inside models. Okay, simple as that. So over here, you can see that there's a order block. Okay. Now this order block has been reclaimed by this one, but this one, has it been reclaimed? Yes, it has been reclaimed over here. But this level, okay, this level is still applicable, because you can still take it from here, and then boom, stop loss over here. And then you see this dead thin displacement, market structure shift, 1 minute, boom, just like that, take it towards it, buy side liquid draw, just goes and hits. Okay, in this case, I took this from the 4-hour, so I saw a 4-hour fair value gap being wicked into, and then I put my stop loss below this. Now, this was a bit of a risky trade, okay, because I was putting my stop loss as soon as I saw the 1 minute market structure shift. So this is one of those rare examples where price action just doesn't really like come back, right? But this could have easily gone wrong, because this right here was pure luck. Okay, so this right here, this whole trade was pure luck. Okay, so anyways, pretty much what I want to show you guys is look for like gold. Now this example is like picture perfect, because you can see that there's a fair value gap inside a fair value gap. So it's a 4-hour fair value gap. You see this huge fair value gap. Inside this fair value gap, you have another demand level order block. Simple as that. Okay, So you see this market structure shift, then displacement, market structure shift, stop hunt, boom, take it towards the opposing supply level order block, right before the order block. Okay, because there's going to be a reaction there. Okay, anyway, basically, accumulation, manipulation, you distribute, and then now we have a continuation pattern over here. Okay, so basically, let me show you guys the other examples. So this one, again, this is basically an example of the 4 hour they have been retested. So you see this retest, you see a 15-minute inducement. Now over here, you will wait for, like, especially if you see something like this, you want to wait for like a 15-minute confirmation if price like pulls back, right? So what I mean by this is, let's say in this specific example, now if you see, like, let's say the 4 hour, like, you know how like it basically wicked into it, right? So I'd say like this is the 4 hours. Okay, this is basically what I'm drawing here, like this right here. Okay, now on the 15-minute, like, because this fair value gap is so huge, you don't want to like put your stop loss here and then like take it here, right? What's the point? There's like no risk to reward there, right? But the thing is, in this type of scenario where it just like takes out this high, the thing is, you want to wait on the 15-minute. You want to wait now. Remember how we treated the 1 minute for these for the manipulation plus stop on inducement? Okay, inducement. I'm just gonna write this as for inducement. Now you want to wait for the same concept, but now on the 15-minute, because there's no way you can wait all this time for like this huge inducement to be taken out, right? But you want to wait for, so you see this candle is basically taking the price higher, but in this wick it's going to have the round of inducement. Okay, round of inducement, in other words, this one, manipulation plus stop on. So manipulation is nothing but a reverse market structure shift, pullback, entry. You see the real manipulation here. Where is it? Over here, manipulation. Okay, this is the manipulation. This is basically the fair value gap that it's stepping into. Manipulation, and you see the market structure shift, ICT 2022, takes you out, stop on, and then once it does that, it goes higher. You just want to make sure you put your stop loss below an order block, somewhere like here, where you see an order block, because it's more than like just going to tap into that and then just go higher. Okay. So manipulation plus stop on is fine at order blocks. Okay, if it's close to an order block, make sure you take it from the lower the order block. Okay, and you can just follow order flow. You can see in the scenario I took multiple trades on this price leg itself, because this is the 4 hour and this is basically many little moves that you can capture on the 15-minute. Okay, once you have the 4 hour confirmation. So it's just the bias, the high time frame bias aligned with the lower time frames. It's as simple as that. So yeah, apart from that, you can see that this is once again a demand level order block. You put the stop loss below the demand level order block. You tap back into it. Manipulation wicks. You wait for a stop on. You don't need to wait for a stop on here. You just see a market structure shift on the 1 minute. You can just put the stop loss below the demand level order block and TP at the opposing buy side decree draw. Simple as that. Okay. You can see that over here is the same concept. See, order block has been reclaimed. If you put your stop loss even here, you can take it. See, because this order block has not been claimed. See over here. This is an example. This is specifically pointed out. Okay, so over here you can see this order block has been reclaimed over here. Like this order block over here has been reclaimed over here, and you put your stop loss here, or even here. You can still get pretty good risk to reward. You can even put your stop loss here, because you can like trail. You see the 1 minute market structure shift. You put your stop loss at the demand slow, and take it towards the opposite. Pass the good draw. Simple as that. Okay. Once again, same concept here. Order block, boom, take it towards the demand level order block. Okay. Unclaimed order block. So this one has been claimed over here, so that means we can just like move past this. Okay, so what I mean by this is, because this has been claimed, it's basically invalid. Okay, reclaim order blocks are basically just gone. Okay, so you see over here, this is gone, this is invalid. So basically, therefore, you can take it towards the next draw on liquidity. So this one has been tested, but you can take it towards this level right here, right? So this one, for example, has been tested, but you can take it towards like this area, no problem. Right. So now let's see what other examples. Again, backtest this on your own, because you gotta always do your own sort of how to explain this, own sort of what's the word for it? I can't remember the word for it, but again, don't depend on a breaker block, because like a breaker block, like I used to wait for breaker blocks to happen, and like yeah, it is pretty straightforward when you see this happen, but like don't depend on it, because you will like fixate on it in a way like you expect the breaker to always form, and then you'll be like, oh hey, where the fuck is my great breaker block, right? If my breaker block's not there, then I'm not going to take the trade, right? So don't fixate on it. Okay, it's as simple as that. So over here you can see that this is the order block. Okay, this is the order block, supply level order block. You put your stop loss somewhere here. Okay, and then you see this manipulation. You see there's like on the slightly lower time frame. So okay, assume this is a 15-minute. You see a market structure shift on the 1 minute, and then you can just take this because you're trading the stop loss over here, and then boom, you take it lower. So let me exactly show you guys where I would entry and where I would exit. Okay, so you can see that over here. Okay, this is where I would stop loss. Okay, this level at this high. Okay, because this fair value gap has been reclaimed over here. This is a breakaway gap because this is something that okay, if it's coming back. So the thing about breakaway gaps, BGs in other words, if it's coming back all the way here, there's a likelihood that it's basically going to, rather than like reversing by a click inducement, it's just gonna go in the direction it's supposed to, because it's a chain set of delivery. Okay, so in other words, guys, basically yeah, it could be an inducement round, yes, sure, but this becomes a breakaway gap if this kind of thing happens. Okay, because this has not been reclaimed back. Okay, so now what I mean by here is like this order block, right? This supply level order block. If you trade your stop loss here, because this has been wicked into the fair value gap, so this is the high, this is the protected high, or the strong high in other words, and then you take it towards the opposing buy side liquid draw, just like this, and it goes and hits. Simple as that. Okay, you can see you can take it towards, boom, just like this, stop loss at the strong high, and then you take it towards the opposing buy side liquid draw. Okay, so simple as that. So you can see this is the, once again, falling order flow. You put your stop loss here. Well, see, this is an example, and then you take it towards the buy side liquid draw. I mean, in this case, sell side liquid draw, because the overall structure is bearish. Okay, again, it's pretty simple. So over here, see, very similar concept. See, market structure shift. Now, okay, this is a good example. Okay, this is one of those examples that I love to present to you guys. 1 minute market structure shift. Okay, 1 minute. Do you see this move right here? This little move, like it taps back and then it goes above. Now this is basically inducement, because the very next moment you just get induced and then go, right? So this is, think of this chart as like the 15-minute, and then if you look at the 1 minute, you will see something like a market structure shift, like something like this, like the manipulation, distribution, and then like it goes like this and it just takes you out, stop on, and then goes inducement right here, right? It's an SMT in other words, smart money trap. Okay, you put your stop loss at the low of this fair value gap, you're all Gucci. Okay, TP right here. Easy. Okay, easy stuff. Again, this is following order flow, and it's pretty simple because it's basically just breaking structure towards the upside, and it's basically following order flow. Okay, so anyways, guys, so again, once again, if you guys notice, this is an order block. This is a supply level order block, retapped, and this fair value gap perfectly aligns with that. You can see a market structure shift at this range. Okay, 1 minute MSS. You want to wait for a stop on even in this scenario. Now, luckily for you, it didn't like stop on here. So even if you use the ICT 2022 model like by itself, you should have been fine. But me personally, I wouldn't take it without a inducement stop on, or I would put my stop loss. If it's a close by fair value gap, then I would put my stop loss, trade my stop loss here. Okay, if it's a good move, if it still gives me good risk to reward, then that's when I would just take it towards the opposing buy side liquid draw. Okay, so that's as simple as that. Yeah, that's pretty much what I want to show you guys. And again, always be mindful. If you guys want, this is let me show you guys. Go to innercircletrader.net. So this is one of the best websites. If I had to like recommend one of the websites, just search up reclaimed order blocks. Okay, or high probability order blocks. Just search up order blocks. You should be able to find it. Let me just search up for you guys, so that way you guys can see order blocks over here. Let me just so if you go to the order blocks, so you can see ICT order block. So reclaim an order block. Just study a lot about the order blocks, because order blocks are like the, how to explain it? The rejection blocks are basically like spots where you have like a lot of rejection wicks. Basically, price is rejecting that level of price, right? Like that key level of price. So it's basically a rejection block. You see over here, see, it's rejecting. See, wicks over here, rejection wicks. A lot of rejection wicks, because it's basically like it's refusing to go higher than that, right? So you see this again, displacement is also one of those things where you can pay attention to, because this is a depth in displacement, and therefore market goes in the inverse direction. Okay, but don't just like don't only depend on it. Okay, so you want to make sure that everything has confluences, and it's all about like, also don't anticipate, like I was doing this wrong. Don't anticipate the market too much. Just go with what's presented in front of you. Okay, don't like try to like do this in a way like you try to predict what's gonna happen in the next 10-15 minutes, right? Like don't like anticipate and then just do it. Just like react to how the market. This comes directly from Q Banks, if you guys have heard of him. Just basically react to how the market presents itself. That's all. Okay, simple as that. So bullish order block over here. You can see that this is the order block. Okay, so again, bearish order block. Boom. just like that. You trade your stop loss here, easy. See, auto block. You put your stop loss at the low. So you see this auto block over here has not been claimed. So therefore, if you put your auto block over here and stop loss over here, you're safe. Even if it like retraces and goes a little lower, because there's a bit of a death in displacement here, right? This is a bit of a risky trade that this guy took. But over here, if you trade your stop loss over here, right, at this auto block, because this has not been claimed. It's as simple as that. Take it towards the inverse. And this is basically a change of character, proving that there's a change in state of delivery. It's basically taking it towards a high. Simple as that. See? This auto block is basically where price rejects. This is why I told you guys to put your stop loss below the auto block. Okay? Remember what I said about gold? Put it below the auto block. So this is once again, up to this point, this was an unclaimed auto block, right? So if you I'm talking like if you look at it in the bullish perspective, you see, it goes like this, unclaimed auto block. Now this was claimed back over here. You see, this was also an unclaimed auto block, but you see, this was the real unclaimed auto block. This is what I showed you guys. Like if you guys rewind the stream back, you can see that example too. So if I show you guys over here, see, this one is an unclaimed order block over here, right? And see, it's the same concept. So this, even though this one was unclaimed, this one was the real one that was an unclaimed, because this was claimed by this was claimed by this, but this was not claimed whatsoever. See, now this was kind of I can't speak. This was kind of claimed though over here. See, so this was kind of claimed. Oh no, this wasn't claimed. See. This was the candle. So over here, this is the candle. So if you put your stop loss here, you have no problems. See? So this is the real candle. See? Okay. Be very familiar. That's a good lesson for me as well. See? This is the real candle. Okay. So this is the real candle of the auto block. So therefore, this has not been tapped by this. Again, this one has not been tapped by any of this. So this one's also unclaimed auto block, and this one's also an unclaimed auto block. But when there's two, it takes out the one that's not claimed. And if there was three above and the other one before has been claimed, then yes, it will like retrace about. So you see, this level has been protected because of this auto block over here. This level, this key level. Okay, that's why this auto block stop loss is going to help you take it in the inverse direction. Simple as that. See, simple. Okay, so again, this is more of like a session where I sort of reflected on what I learned as well. So it's pretty good over here. So it's pretty simple. The markets are pretty easy because like you see these auto blocks, boom, just take it towards the opposite. So see this one has been claimed by this one has not been claimed from anything. So therefore, putting your stop loss here is the best decision. You can take it towards the inverse. Okay, reclaim auto blocks once again. You can see these are all reclaim auto blocks. Again, any auto block level where it's basically priced as reclaimed at that level. See, with this one move, it basically claims all these auto blocks as well. So again, reclaim auto blocks is basically when an auto block has been claimed back. Okay, that's basically what it means. Okay, so it's pretty obvious, right? So yeah, so again, very powerful concepts. Apart from that, what else do I want to show you guys? It was a good 48 minutes so far. It's been like 48 minutes of me just yapping, but it was a good way to sort of revise what I've learned as well, and what helped me get profitable. You see this auto block, you tap back, and then you see this auto block has been tapped back by this one. Let me just draw so that it makes more sense. So let me just draw. Okay, so over here you can see that this auto block, okay, this auto block has been tapped back with this one. So if you put your stop loss here, because this one basically induced, so if you follow auto flow, even like if this has like taken all the liquidity from here, and then it's basically going towards this buy side liquidity draw. Okay, but over here you can see that even if you put your stop loss here and you see this like 1 minute, like let's say this was on the 15 minute, 1 minute misses at this range, 1 minute market structure shift. Again, if I have to remind you, one of these, right, market structure shift, pull back entry. Even if you see one of these, trade your stop loss at the low, boom, you can just take it towards the buy side liquidity draw. Simple as that. Okay, if you just follow auto flow. And over here you can see that this is the demand level auto block. You reclaim that demand level auto block, reclaim that, same thing. Okay, easy. See, it's simple, guys. See, stop loss at the low of the auto block. Okay, simple. Happens every single time. This is how market maker models work. Okay, So you don't want to like I remember at one point I was also doing this mistake. I was just looking at market maker models. Sell side of the curve, buy side of the curve. Everything is like a sell side of the curve. It's like the dumbest shit ever. Sell side of the curve, buy side of the curve. You can depend on like the market maker models itself, you know? Like cause like there's always the narrative, right? That's the word for it. The narrative. What's happening in the overall picture, right? Just picture it. Like what's going on here? You know what I mean? Like don't stress too much, right? Of course, it's very stressful when you're in a trade, right? But like try to chill. Just act like you don't give a fuck, okay? Even if you like, cause like I know it's hard to like not give a fuck, but like if you did it right, don't like the way you're gonna build confidence is by practice. There's like no other way around this. Just practice, practice, practice. Simple as that. Okay. Practice makes perfect. Again, once again, stop on. See, it just takes it towards this stop on, and then it takes the see, this is a stop on, and this creates a strong low, and you put your stop loss here. You see a market structure shift, and then boom, you take it here. Because this 15-minute stop on has been done at this huge forward gap. Okay, this is an example, prime example of the stop on. Let me zoom in so you guys can see it properly. I hope you guys will learn this. 15-minute. This is the 4 hour. Okay, 15-minute first first market structure shift. This was the fake out market manipulation. The fake out manipulation, and then we have the actual induced stop hunted manipulation over here. We see the market structure shift. Boom, you take it towards you trade a stop loss here, and you take it towards the buy side. Good job. Okay, again, it's easier said than done because you gotta always even if you learn all this shit like coming from myself itself. Like even if you like I know it seems like it's fucking easy, right? Oh wow, this is so easy. Like I'm just gonna go apply this. Like, it's not that simple, guys. Like I wish it was that simple because like every single time I'm in front of the charts, I'm like, what? So it's more of like practice, practice, practice. It's like there's no other way around it. Like no other way around it. You just gotta practice, practice, practice. That's it. Like demo, 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 demo. And then once you have a strategy that's proven to be profitable and you have like data on it, that's when you want to go and apply it in the real markets. And that's how you afford your Bugatti. Andrew Tate, the ball kickboxer, the fucking the Lamborghinis and all this fucking lavish lifestyles. Once again, don't be like fucking blinded by those like little gurus. Hey, you'll buy a Lamborghini in fucking 3 weeks if you trade with me. Fuck no, that's not gonna happen. That's never gonna happen. It's always like you gotta practice, practice, practice. Like get it in a way that you gotta go like run to different extents of like people think it's like an easy way to make money, but like it's actually the hardest way to make money because you're putting money at risk. It's like gambling if you don't like really know what's going on. You know what I mean? And like for a while you're gonna fail. It is what it is though. Like anything in life, like it's gonna take a while, right? So some people go their whole lifetimes like just unprofitable. So it's more of like I don't know. It's just anything in life. If you're like trading is one of those things like that really helps you like in any sense, like whether you become successful with this or like something else in life, it just like builds a good I don't know how to explain it. It's pretty good. Yeah. Anyways, so over here, see, once again, manipulation plus stop hunt is done by this point. Supply of the order block reclaimed. You put your stop loss here, and boom, takes it to the opposing draw. Okay, these are examples. This is by Lewis Kelly. Now this guy made I think 10k on this trade. I'm not too sure, but yeah, see this internal structure. So this is the external structure. External structure is basically the swing. Okay, so if you're looking at it in a swing structure, it's basically impulsive or swing structure, substructure. So substructure is just the market maker model on the 15-minute. Okay, assume this is the 4 hour. Okay, by side of the curve, side of the curve. Okay, easy stuff. Again, it don't matter the stuff. I just dump everything here, but yeah. See, resistance and support over here. That's basically like the high time from key levels. See this order block has been reclaimed over here and takes it towards the upside. So again, pretty much, if you guys now this in itself won't make you profitable. Go fucking apply it. Go backtest it and journal every single trade that you take. So that way, like just backtest on paper and journal every single trade that you take, and that's what I do. And with every trade, you just want to like see, like you use it as a learning experience. What did I do wrong? Did this actually go the way that it was supposed to go, right? So once you have all that data, you're fine. You see over here, I put my order block. See order block entry. You see this fair value gap has been retested. So you can even trade your stop loss here, right? Because this auto block, you can trade your stop loss here if you want to be like extra safe. You take it towards the opposing buy side withdrawal. Simple as that. Once again, see, this was a trade once again I took. Boom, just like that. You see the stop hunts? You see it pretended as if it would go in here. Stop hunt. Okay, this wasn't really a stop hunt, but see all these rejection wicks here. So it's basically lost depth in displacement towards the opposing auto block. So I put my TP right here once again because I respect the whole concept of auto blocks. So this auto block has been claimed by this one, but this one was not claimed before claimed. So therefore I put my TP here. Okay, simple as that. Before the auto block. Before. Okay. Now this is an example of a bad trade. Now let's look at why we lost this trade. Okay. Now this over here, you see, this has been wicked into. Now this inducement is basically to take you out, right? Now over here, what I need to make clear is this is a fair value gap. Okay, it has been retapped. Okay, this order block has been tested over here, and this is the level that I took from my trade from. So it tapped back into this fair value gap and took it higher. Actually, we won this trade. I didn't realize. Okay, we won the trade and then it took out this rest in liquidity here. Okay. So basically, like it went towards the buy side liquidity and it just like took out this draw. I mean, it makes sense because it like took out this order block, and then it went higher. This does this unclaimed order block, and you take it back towards the fair value gap, depth in displacement. Put your stop loss below this. Take it towards the opposite buy side liquidity. It's as simple as that. Okay. See, once again, manipulation. Okay. This is the tap back. This is the manipulation, the fake out. Okay, and then you see the inducement. Okay, manipulation. Okay, right here. You see this green candle. These white candles on my chart are basically green candles. Green candle, inducement. Okay, this is basically the manipulating smart money traders with their little manipulation setup to get induced. Stop on. You put your stop loss. Once you see this, that's when you want to see for the market shift on the 1 minute and take it towards the upside. Simple as that. Okay, towards the 15-minute draw on liquidity. Now it's easier said than done. Just go apply this in the market and see how this plays out. Okay, these are real examples, as you guys can see. See, forward. See, this is the inducement. See, it pretends as if it's going in that direction. Stop on. Boom. Inducement once again. Reclaim unclaimed order blocks. Stop hunts. Fair value gap trailing. Putting a stop loss at the right spot. And market structure, price action, in other words. Okay, so it's not nothing complicated. See, this order block has been reclaimed by this one. This one has not been claimed. That's why this works. See, okay, order block. This order block has been claimed over here. See, this order block over here. This one has been claimed over here. Okay. See this, I mean, let me zoom in so I can show you guys exactly what I talk about. So over here, you can see that, see, boom, demand level order block, tap back into it, boom, upside. You see this demand level order block? This was not claimed before. So boom, it comes back, manipulation, 1 minute market structure shift, boom, upside, unclaimed order block. There's an unclaimed order block right here. See, takes it towards that. Boom, just like that. You put your stop loss here. All right, I mean TP here. Don't put it like all the way up here. Okay, inducement. All right, that's pretty much it, guys. I hope everything is clear. I don't know if you guys have any other questions. Send me this DM on Discord. It's a Veloxo. Okay, simple as that. See, so this is a good trade. This was like a 2K trade. Look at this. This is on demo, obviously, but the really good practice trade. See, unclaimed order block. You see, unclaimed order block. I mean, this order block was claimed by here. This one was not claimed. So therefore, we tap back, put your demand of order block over here. You don't even need to put it here, actually. You know for a fact that this has been like claimed before. But if you want to be extra safe, yes, there's a lot of risk and liquidity in this area. So you put it here and took it towards the upside. And this is the aftermath. This is the, where is it? I think I showed you guys like the aftermath on like one of those streams. What is this? Again, pay attention to market structure. Why the fuck did I short this when it was clearly going upside? See, it broke the inter-term high, so why the fuck would you short this? See, that's why you lose money. Stupidity. Easy. So, again, market structure. Very important, especially on the 15-minute. You need to know which side of the market are we flowing towards? Is it aligning? You know what I mean? It's all about the narrative. Okay? So it's as simple as that. See? Order block, reclaimed. Okay? Order block has been this one has been reclaimed by this. This one has not been reclaimed. So manipulation, market structure shift towards the opposite buy side withdrawal. And this order block over here was even better because this one was an unclaimed order block. So that's like even better risk to reward. Okay. See, pretty easy. Pretty fucking easy. Again, this is easy. You don't really need to pay attention to 710s or 618s on the fib. Like that's not necessary. See, smart money trap. This is the fair value gap. See, stop hunt. Smart money trap in other words. Stop hunt. Boom. Stop hunt. Boom. Takes out this stop. This market structure shift 5CT 2022 guys, and boom. Okay. Great. Awesome. So once again, see this one, this order block. Okay, this is the order block. This you put your stop loss here. Boom, just like that. Okay. Now even if you look at it in this scenario, like this one has been claimed, right? But this order block was not claimed, so it was claimed by this one, and boom, take it towards the unclaimed order block. Now we had unclaimed order blocks even higher, like up to this point we had an order block, unclaimed order block over here. See, that's why we have the rejection breaks right there. Let's see how the market maker was basically how the price delivery works. See, so in this case you take this order block, purchase stop loss here, boom, this is the order block, and you see this 1 minute market structure shift. You see the price reaction to this order block. 1 minute market structure shift, you put your stop loss here, boom, take it towards you. This is the inverse fair value gap, so that's why you took it here. But realistically, this was the order block over here. See, order block. See the rejection break. So you put it below. You put your TP below the order block, and boom. Even at the wick, like the top of the wick, like right here. See, takes there up to there at most, but ideally right here. Okay. Again, I think I gave you guys free sauce. It's like I literally did this for like completely free. So if you guys like, if you don't mind, just drop a like. You know what I mean? Yeah, just practice this on your own. Okay, don't fucking just be a goofball and just like go apply it in the market and be like, hey, where the fuck is my money? You know? Don't do that shit. This is not like your ticket to a Bugatti. Okay. Hey, I love that, like saying my ticket to a Bugatti. Like, bro, you're not buying a fucking Bugatti just by fucking trading for 10 minutes. Like, fuck. Okay. Anyways, pretty much I think everything should be fine now. Okay. I hope you guys enjoyed this. Yeah, that's pretty much it, guys. See you guys later, I guess. See? Unclaimed order block, claim back. Boom. Okay, cool. Awesome. Then I'll see you guys. Alright, says unclaimed order block. Once again. One last example. Unclaimed order block. Boom. See? Once again. See? There's an unclaimed order block. You put your stop loss here. Boom. Just like that. Fair value gap reclaim. You can even like trade your stop loss here or even here. Like put that and then you take it towards the downside, whatever the unclaimed order block is. Now, even though there's rejection breaks, this was really not I don't know what the fuck I was drawing here. But yeah, you get the point. Okay. Easy. See, this was a manipulation in inducement. Stop on. You put your stop loss here, no problem. Okay. The session liquidity is something else that you need to talk. I'll talk about that on a different day. So basically, there's different patterns in session liquidity. Like Asia consolidates, London manipulates and distributes, NY distributes. Depends on like which side we're manipulating. If it's manipulating the highs, then we'll distribute lows on the NY. And if it's manipulating lows, then we'll distribute high on the NYs. Manipulate, in other words, manipulate during London. That's what I'm saying. Okay. That's assuming Asia is consolidating. Okay. So we have a pretty good example over here as well. So if I show you guys my current trade, you can see that this is Asia consolidates, London manipulates, NY distributes, and then rebalances, and then reverses. Okay, it's as simple as that. So yeah, that's pretty much it, guys. You see CRT is basically nothing but just a candle range theory. Okay, this is just a wick. That's a manipulation in this wick. The rejection. Okay, the manipulation is nothing but just like a consolidation rejection. It's like a fake out and then like reverse type of thing. Okay, just in case you guys don't know what that means. Okay, once again, order block reclaimed. Okay, order block. So this order block has been reclaimed by this one, but this one has not been reclaimed. So boom, just take it towards the opposite. Easy. Simple stuff, isn't it? So you just align it with the high time frame. That's it. See, You put your stop loss here. Now this in this case, I'm pretty sure there was stuff above that had to be rebalanced. That's why we went from a sell program to change the state of delivery. Okay, so therefore it took us out. See? Okay. Anyways, yeah, that's pretty much it, guys. I hope you guys enjoyed. And I'm gonna head out. It's been 1 hour, 4 minutes of just me yapping straight up about this crap. Okay, all right. See you then. Bye bye.